A Year for Accumulation with Monex, featuring managing partner of CPM Group and author of the Monex Precious Metals Market Outlook Report, Jeffrey Christian.
Hello, my name is Sean Brasney, Sales Director for Monex Deposit Company. I'm here with Jeffrey Christian, Managing Partner and Founder of CPM Group and the author of our Year for Accumulation report. Thank you for being with us today, Jeffrey.
It's always a pleasure to be with Monex.
As we come into the fourth quarter of our Year for Accumulation, it looks like the precious metals market is still positioned for further gains to the upside. And in our October report, Jeffrey, you summarize many of the reasons why. Would you be willing to summarize that for our viewers here?
Well, yeah, briefly. I think that the report's probably much more eloquent than I could be orally. But, we're looking at a variety of economic, political, and financial issues. We've seen issues with short-term interest rates. Obviously, the trade war is continuing between the United States and China. The U.S. continues to browbeat other countries, including Europe, on everything from cheese and wine. You still have the Brexit issue. And we saw this week, that Boris Johnson met with Angela Merkel, and basically the EU said this isn't going to work. You guys don't have anything that we can agree upon. So you have Brexit, you have issues, political issues within the United States, you have the trade wars. You are seeing some people back away from recession fears on an immediate basis, but the worrisome issues related to a slowing economy remain, and recession risks for 2020 and beyond remain. So I think that there's a variety of economic and political and financial issues, all that probably will create an environment that will be supportive of gold prices and investment demand for gold and silver, even if you see some things looking like they're a little bit better than people thought they were 3 months ago.
In regards to the funding pressure in the U.S. money markets, I want to talk about that briefly because at the beginning of the year, you were real instrumental in helping our viewers understand QT, or quantitative tightening, which was essentially pulling dollars out of the system at a time when there was still great dollar demand going on around the globe. I do think that was something that was contributing to the uptrend that we're seeing in the dollar and the dollar trading at multi-year highs. And, based on that, quantitative tightening, do you think that that's a main contributor to the funding pressures we're seeing in the U.S. money markets?
I think the quantitative tightening was definitely a factor that was contributing to the problems that we saw in the overnight repo market. But there were other issues there too. The really worrisome thing that we saw in the problems in the overnight repo market was that a lot of the factors that came together to cause these problems were quite obvious and quite apparent and quite visible on the horizon. And why the Fed did not act preemptorily to avoid those problems is really worrisome to us, because they should have seen these things coming and they should have taken preemptive steps, but they didn't.
Yeah, I agree. And, back in January, the Fed said they'd be ending QT at the end of the year. And the Fed meeting in June, they said they'd be ending that program a couple of months early, which seems like that would kind of put us right into this area now. And yesterday, Powell was on TV saying that he was ready to, grow reserves and expand balance sheet again. So if they do end QT, do you think that will be something that will help cool off the dollar on this trend, or maybe even help it go in the other direction?
Yes. I mean, you're looking at the Fed now. The New York Fed is pumping in about $75 million a day into the overnight repo market to provide liquidity there. Powell, as you said yesterday that they would start selling or buying bonds again to increase their balance sheet. But really, I mean, it's not to increase their balance sheet that they're doing that. It's to increase dollars in circulation. So clearly, we're moving back to a quantitative easing stance from the quantitative tightening. Clearly, the Fed has concerns that there aren't enough dollars in circulation to meet the needs, even though there are too many dollars that we've printed over time. that they realize that there's some liquidity issues, that they're in a liquidity trap, that they have to be much more accommodative than they thought they would be. So I think that all of that puts a cap on the dollar, at least in the near term. I'm not sure that it drives the dollar down, but I do think that it probably removes one of the major factors that's caused the dollar to be stronger over the last 6 to 9 months than a lot of people thought it would be.
Jeffrey, again, your information and your time is extremely valuable to us. I want to thank you again for that. There's a lot more to talk about in our October Year for Accumulation video in regards to silver and palladium as well. So give Monex a call today, talk to one of our account representatives, and ask for your free Year for Accumulation report.